Good morning, viewers. It's Thursday morning, March 13, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Cooler than forecast February inflation pushed stocks higher after 2 days of heavy losses. US stocks advanced on Wednesday as cooler than expected inflation data helped staunch a sharp sell off, while the escalation of US President Donald Trump's chaotic multi front tariff war kept gains in check. The S&P 500 and Nasdaq rose on Wednesday after investors weighed the latest trade skirmish with Canada and a solid inflation report. S&P 500 and the Nasdaq closed in positive territory, the latter enjoying a muscular boost from tech and tech adjacent momentum stocks. Both indexes have been under pressure in recent days, dragged lower by global trade tensions and investor concerns about US economic growth. With Wednesday's advance, the S&P 500 is 8.9% below its all-time closing high reached less than a month ago. On Monday, the bellwether index dipped below its 200-day moving average, considered a significant support level for the first time since November 2023. On March 6th, the tech-heavy Nasdaq dipped more than 10% below its record closing high reached on December 16, confirming it has been in a correction since then. The blue chip Dow waffled between red and green for much of the session, but ended modestly lower on the day. At close of trading on Wednesday, the Dow Jones Industrial Average fell 82 points or 0.20% to 41,350 after swinging between gains and losses most of the day. The S&P 500 gained 27 points or 0.49% to 5,599, reversing earlier losses. The Nasdaq Composite gained 212 points or 1.22% to 17,648. The Labor Department's Consumer Price Index showed consumer prices cooling more than analysts expected, providing reassurance that inflation is headed in the right direction and keeping hopes alive that the US Federal Reserve would cut its key interest rates this year. Wednesday's report showed that consumer inflation slowed a little in February after January's surprisingly hot reading. The Consumer Price Index rose 2.8% in the past 12 months, slightly undershooting forecasts of 0.2% from a month earlier, also below expectations. Yesterday's inflation release is unambiguously positive for risk assets, as there is greater confidence that inflation is not re-accelerating like January's data showed, which gives policymakers a bit of breathing room and should allow the Fed to loosen policy should signs of labor market weakness emerge. The report was the first monthly inflation reading to fall fully under the new Trump administration, though it does not capture the impact of the latest tariffs. Inflation concerns have intensified as in President Trump's import levies risk fueling price pressures while also weighing on growth. Resurgent inflation would make it harder for Federal Reserve to further cut interest rates even if the economy is slowing. Some investors are growing apprehensive that prolonged uncertainty over tariffs could hinder growth and tip the US economy into a recession. US equities have come under pressure amid the rising temperature of tit for tat tariff disputes between the United States and its trading partners, rattling investors and giving rise to fears that the resulting price jolts could tip the United States along with Canada and Mexico into recession. Goldman Sachs lowers its year-end target for the S&P 500, while JP Morgan sees increasing odds for US recession. In his latest tariff salvo, Trump imposed 25% duties on imported steel and aluminum, prompting Canada and Europe to respond in kind, ramping up their retaliatory tariffs on US exports. Early Wednesday, the Trump administration's 25% tariffs on all steel and aluminum imports took effect. Canada retaliated, saying it would impose a levy on an additional $20.6 billion in the US imported goods. The European Union announced retaliatory tariffs targeting a range of US products, including bourbon, whiskey, boats, and motorcycles. Technology shares led the gainers among the 11 major sectors in the S&P 500, while consumer staples and healthcare were the major laggards. Nvidia Corporation led chipmakers higher. Intel jumped 4.6% after reports said TSMC had pitched Nvidia, Advanced Micro Devices, and Broadcom about taking a stake in a joint venture to operate the US chip company's factories. In late hours, Intel Corp named industry veteran Lip Bu Tan as its next chief executive officer. Adobe Incorporated gave a tepid outlook. PepsiCo fell 2.7% after brokerage. Jefferies downgraded its rating on the stock to hold from buy. In recent trading, Wall Street's fear gauge edged down. The CBOE Volatility Index, or VIX, closed at around 24. Treasury yields rose about 4.3%. The benchmark 10-year yield settled about 4.28% on Tuesday. The US dollar strengthened again slightly after the WSJ dollar index settled Tuesday at its lowest level since November. In cryptocurrencies, Bitcoin rose 0.1% to $82,909. In commodities, West Texas Intermediate crude rose 2.2% to $67.68 a barrel. Spot gold rose 0.5% to $2,931 an ounce. Lawmakers on Capitol Hill continue to wrangle over a stopgap spending bill in an effort to avoid a government shutdown, adding further uncertainties to the mix. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, like, and share this video as much as possible. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.